If you've been through a full crypto cycle, you know how crazy the top can get. And the thing is, it almost never feels obvious in the moment until it's already too late. So in this video, we're breaking down the red flags that showed up near previous cycle tops so that you've got a better shot at not being exit liquidity. And if you really want to come out ahead this cycle, make sure that you watch until the end, because there's one thing that most people miss, which makes all the difference. Let's start with perhaps the most obvious one, price behavior. Near the top of a bull cycle, price stops rising gradually and starts going vertical in what traders call a parabolic move. And historically, that kind of acceleration is a pretty reliable sign that we're entering the final stretch. We saw it in late 2017. Bitcoin had already climbed most of the year, but then it doubled again within the last 2 weeks of November from around 5K to 10K before peaking over 19K in December and crashing soon after. Then in 2021, same story. In January, Bitcoin was around 30K. By April, it had rocketed past 60K, then crashed back to 30K. Later that year, it rallied again quickly to 69K before the real breakdown began. Now, these kind of moves aren't driven by fundamentals. They're driven by momentum and euphoria. The media covers the spike, buyers rush in, price goes up just because it's going up, and that feedback loop creates the parabola. So when it breaks hard. In 2017, Bitcoin dumped over 80% after topping. In 2021, it dropped more than 70% within a few months. Now, right after that, something else tends to happen: rotation. Bitcoin cools off and money starts flooding into altcoins to usher in the alt season. The real one, not the one everyone calls for every other month throughout the cycle. But it's not just that alts go up too, it's a pattern. Bitcoin tops, then liquidity rotates as people chase the next big pump. End of 2017 was textbook. Bitcoin peaked in mid-December, but altcoins like Ethereum didn't top until January. Same deal in 2021. Bitcoin's dominance dropped from 70% to around 40% by summer, while many alts went vertical. Alt season is often the final sprint before the crash. Beam has been up to a lot lately. They're not just another blockchain. With a sizable treasury behind them, it's now a whole ecosystem focused on building and backing the kinds of technologies that'll shape what the internet looks like in the next decade. Stuff like DeFi, decentralized computing, and new kinds of dApps. Beam doesn't just fund things and step back. It invests, builds, and connects the dots across different technologies to create something that actually works together. But this isn't just Beam's vision. It could be yours too. With the Beam token, you get influence over how its ecosystem grows. So it's not just about watching cool tech emerge, but being part of building it, even if you're not a dev. You can learn more from their Medium page, which we've linked below, or just keep an eye on what's launching. There's a lot cooking. Now, the third signal to watch for is a bit more subtle: bearish divergences. This happens when the price keeps climbing, but momentum is fading. It's easy to miss because price still looks strong, but indicators like RSI, MACD, and volume start flashing warnings. So take RSI, the Relative Strength Index. It measures how strong the recent moves are from 0 to 100. In a healthy trend, RSI rises with price, but near the top, prices can go higher while RSI starts falling. That's a divergence. It means every push higher is getting weaker. In April 2021, Bitcoin hit over 60K with daily RSI over 90, but towards the end of the year, when it reached 69K, RSI barely touched 70. That's textbook divergence. Price up, momentum down. Next, MACD, short for a moving average convergence divergence. Basically, another way to track momentum. When MACD flattens or crosses downward while the price is still climbing, that's a red flag. In 2021, MACD peaked before the price did. When the histogram started shrinking, even as new highs printed, it signaled the trend was losing strength. Then there is volume. This one's simple. Big moves need big volume. If price is pumping but fewer people are trading, that is not bullish. In November 2021, volume was way lower than it was in January, even though the price had doubled. Apart from the charts, there's sentiment. People often point to the fear and greed index, but it's a pretty poor indicator for timing tops, as the market can stay in a state of extreme greed for a long time. So use that one with a grain of salt. So sentiment is less about a number, but more about the vibe. You'll hear stories of people going all in, quitting jobs to trade crypto, Uber drivers and barbers dishing out crypto tips, and family members who previously never invested asking how to buy Bitcoin or the latest meme coin. In 2017, global searches for Bitcoin hit peak popularity in December. Interest was literally at 100 of Google scale during the week of the all-time high. For context, by April 2018, searches had fallen to a relative 17, illustrating how unique that top moment was. In 2021, search interest also jumped dramatically during the rallies. Google Trends show Bitcoin searches in May 2021 were at around 100, and it wasn't just curiosity. People were actually piling in. At the peak of 2017, Coinbase's CEO said they were signing up 50,000 new users a day, and its app hit #1 on the US App Store in both December 2017 and November 2021, and that's why Coinbase reaching #1 on the App Store is one of the most memed cycle top signals in the crypto community. Then there's social media. At the height of a crypto bull run, displays of newfound wealth flood social media. In 2017, it was when Lambo. In 2021, it was NFTs. People flexed owning Bored Apes or CryptoPunks, costing hundreds of thousands to millions of dollars. And at around the same time, retail's piling in. The mainstream starts blasting ads and endorsements, pulling in even more late buyers. Remember in early 2022, when we had Super Bowl ads from Coinbase, Crypto.com, and FTX, all in the same game. Or think back to 2021. You had Matt Damon doing Fortune favors the brave ads for Crypto.com.
Fortune favors the brave,
which became a meme for bag holders afterward. Tom Brady and Steph Curry were tied to FTX. Paris Hilton, Justin Bieber, and Eminem were flaunting their NFT profile pics. But it's not just celeb endorsements. There will be an endless stream of bullish news, price predictions, companies jumping onto the bandwagon, more ETF hype, and so on. If the price is already going parabolic and everyone's talking about it, not just the crypto bros,
NFTs,
the hat, the shades,
attention is probably already peaking by this point, and the top may already be behind you. And this time is not different, at least based on what history has taught us. Last but not least, we have the good old on-chain and technical metrics, which give more objective signs of market froth.
So let's start with the classic mvrv score.
The indicator is based on how much profit the average holder is sitting on. When it hits the red or top zone, it means the market is extremely overheated. In both 2017 and 2021, the Z-score flashed red right before the market reversed. Then there is NUPL, or net unrealized profit loss. When it enters the euphoria zone, just like it did before the 2018 and 2021 crashes, it's a sign that most holders are in heavy profit and sentiment is maxed out. Finally, you also start seeing dormant wallets wake up. Coins that haven't moved in years suddenly get transferred, often to exchanges, which means holders are looking to sell. Now, we've actually done a full breakdown of these metrics and how they work, so if you want to dive deeper, go check out our video on the most reliable on-chain indicators. So by now, we've covered most of the major warning signs: price action, alt-season rotation, sentiment shifts, even the on-chain red flags. But the truth is, you probably won't know where the exact top is until after it's passed. So instead of trying to time the exact top, you're better off watching closely for these signs, resisting greed, and taking profits steadily. You'll be way ahead of the crowd this way.